Hey guys, welcome to Altcoin Ignition. My name is Mark, and today we're just going to have a bit of a look at the charts. I just want to highlight what I think is happening in the markets right now, just from a technical point of view, and also give you guys a couple of tips on how you can view the market in its correct context. So if we have a look at the chart here, I've got Elliott waves counted out here, but Elliott waves can be very confusing for people. The way to simplify Elliott waves really is to just look at them as impulsive and corrective moves. So if we have a look at the angle here, so this move here is very steep. Okay, steep moves are usually going to be impulsive. So Elliott waves, whoops, trying to spell that correctly. Elliott waves move in impulsive and corrective patterns, where impulsive patterns are in the direction of the trend and corrective patterns are counter trend, right? So if we look at this one as being quite steep, as being impulsive, and this one here being much less steep, this one would be corrective or counter to the trend. So the trend is down, this is the trend, this is counter to the trend, and then the trend resumes, right? Now if you were to take the angle tool here and put an angle on this, okay, we'll see that that angle is 48 degrees there. Okay, and if we were to take the angle tool and put it on here, what we'd find is that is 23 degrees. Okay, so this is much steeper than this, and generally speaking, over 45 degrees is going to be impulsive and under 45 degrees is going to be corrective. It's not a hard and fast rule. There's obviously exceptions to the rule, and also you need to understand that you can skew this out like this if you want, and then the angle tool doesn't adjust for that. So if I now look at this there, that'll only say 20 degrees, but obviously you wouldn't look at a chart this way. That's just stupid. You'd probably push the auto button and you look at it something like this. Okay, you want to view the market sort of close to how the chart is as standard, and then use the angles that you get from that. Okay, so the angles are just a guideline. I don't actually use the angles. I'm just trying to give you guys a point of reference, but basically steep, impulsive, shallow, corrective as a general rule. So what you might find sometimes is you might find that you can do a 1, 2, 3, 4, 5 count instead of an ABC corrective count in a very shallow wave, and that it meets all the rules. But in that situation, it's quite likely that maybe your count's wrong or whatever. It doesn't really matter. If it's shallow, it's more likely to be corrective, and so we should expect a shallow move to reverse until proven otherwise. Okay, so for this one here, we should have been expecting this to reverse because it's running counter trend. It's the angle is not steep enough for it to be an impulse wave and a new trend up. So we should have been expecting this to break down, and we only would have changed our view on that had it broken up. Okay, and then obviously after this is broken down, we then have now another very steep impulse move down. Okay, actually, let's just take that there. Okay, this is even steeper than the last one, so it's a stronger move to the downside there. Big sell-off. Okay, we've got a clear 1, 2, 3, 4 waves. Okay, the third wave is nice and easily broken into 5 waves itself, which is one way of identifying a third wave price action, is that it very easily divides into 5 waves. All these waves, as you break them down, will divide into 5 waves, but the third wave tends to divide into 5 waves without having to jump down through the time frames in the majority of cases. So you can identify that that is third wave price action here. This triangle, okay, let me just clean this up a little bit. A triangle is what you usually see in a fourth wave. Okay, so you've got a triangle here, okay, 1, 2, 3, 4, triangle, 5, right, and then a correction. Okay, up here we've got the same thing, 1, 2, 3, 4, we get a triangle, 5, and then we get a correction. Okay, and corrective moves don't have to be ABC. Sometimes they can be a triangle, which is A, B, C, D, E. So if I was to label this one here, okay, I usually take this first little pullback into here would be A. Okay, so come down here and then it comes back in and touches that. If you were to drop through the time frames, you'd see that a bit more clearly. But that would be A, B, C, D, E. Okay. Just change that to something that looks a bit better. Yeah, just move the 4 above here. see that a bit more clearly. Okay, cool. A, B, C, D, E, and they usually break to the opposite side of the E wave, which is which is what we've had here. And now the target for this, so there's two different ways to measure the target out of a symmetrical triangle like this. The sort of most traditional way is to take the widest point of the triangle like that, measured move, and then throw that in there. Okay, but that's I mean, it works a lot of the time, but it's not always correct. Okay, the more accurate way is to take wave 1. Okay, so we know wave 1 is up here. Okay, measure the length of wave 1, and we can usually expect wave 5 to be very close to or the same length as wave 1. So what does that do? So if we come down here and take it from this retest here, or you can go from here, or you can go from the retest. That's sort of personal preference. I usually find the retest is better. So we've dropped down here, it's come up, it's retested here, and now dropped off. Now look where that takes us. That takes us pretty much perfectly to this swing low here. So I've marked that on my chart, 31,128. This is on the FTX Bitcoin Perpetual Futures chart, so the price will be slightly different of that swing low depending on what chart you're on. But basically, I'm expecting the bottom to be around there somewhere. We could go a little bit shy of that, we could go a little bit over, but generally that should be the bottom of this move. Analysis can always be wrong. Of course, we could get a huge wick down there and we could just get a close here, but I think it's more likely we probably get a wick down to here, and then what's going to happen after that is we're either going to go into another correction, okay, so it'll be a bit of a larger corrective move, all right, an ABC like this or something like that, or we're going to start a new uptrend. It'll be one of the two. And the way that we would know whether or not we're in a corrective move or a new trend is whether or not that move is corrective or impulsive, right? So if it's a reasonably shallow move, right, moving in parallel lines in a parallel channel, then that would typically be corrective. But if the move was to break from parallel lines and become quite steep and impulsive, then we can start looking at it as a new uptrend, which is what we want to see, right? So yeah, that's how I'm viewing the market right now, and that's all I got for this video. Thanks guys, see you in the next one.